Hey, Matt, good afternoon. Welcome to another installment of Pro Market Outlook meetings.
Thanks, Chris.
We probably won't go as long today as our January meeting. That was kind of a marathon. Let's maybe keep this one at maybe a 400 or an 800.
Yeah. Hey, there's a lot to talk about. We go, just can't stop.
And corn and beans don't seem to ever want to go down. So there's a interesting environment here we can dive into.
Yeah, exactly. We just buy it and never let go. That's what it seems to be telling us right now.
Which as farmers is exactly what we're supposed to be doing, is just
Right,
get
right.
long, stay long all day, every day.
We're always long. It's against our nature.
So how
Uh,
how is how is a person supposed to even want to begin to get short in an environment like this?
well, it's a good question, but it's interesting. I mean, it certainly feels like there's been probably more farmers selling this year than maybe I've seen in a career for the first 6 months since harvest, which is good because the markets are so inverted. We're listening to what the market's trying to tell us to do.
Yeah,
So all of that's good news. But yeah, from this point forward, I think we're probably banking on the idea there's not that much out there on old crop.
yeah, yeah. That meets what I've found in talking to farmers that are moving old crop. Is a lot of it's gone, and a lot of it at lower than they wish. But like you said, did what the market was asking and sold it and brought it to town, and yeah, here we sit.
That's right.
And a lot of guys I think are like you said are pretty well marketed for the new crop too, and at some pretty darn good prices compared to the last handful of years.
Yeah, that we always kind of notice like there's a transition that takes place sometime through the year where we start to see more new crop hedges come in than
Hmm.
old. And I think that's finally taken place. That gives me a signal of two things. One, new crop prices are so good, but I think even more it's there's just less old crop left out there. It's
Yeah,
probably mostly in commercials hands right now. And so it'll be up to the commercial to primarily carry that, whatever supply is left out there into the new crop.
sure. With regard to 2021, thinking on that new crop, I guess what are the main takeaways for us here as the dust settles? We've had the quarterly stocks and acres report. We had our April WASDE report already. After some of this information comes in and you've had a chance to digest it, what are your main takeaways here?
Yeah, I think the main takeaway, obviously, from the stocks and acres report was the acres portion. That was kind of a, I don't want to say it was game changing, but it was kind of game changing. It got us a new look at the balance sheets. I think we don't really see that factored into much until the May WASD, so another month away basically. But until then, we're really focused on the planting pace. I think what the acres report said was we kind of already knew it a little bit, but there's no room for error. There's just no room for error. I don't know if you happen to have that balance sheet that we want
Yeah.
to share and talk about, but while you're pulling that up, one comment, I think everybody instantly when they saw the acres number, they assume that's going to be the smallest number we'll see all year. But nonetheless, we have to address that that's the acres number we're going to see at least into that June report. That July USDA report. What I've done here, looking at potential new crop supply and demand, what those acres numbers show what the March 31 numbers were. The yield number is what the Ag Outlook Forum showed us in February. And again,
Mhm.
we're on the right columns for both of the new crop projections. Plugging in the old crop carry out, there's just not a lot of room for anything in the USDA's balance sheet. You look at those numbers, and what you're likely to see in that initial May report is something that just holds kind of pipeline level stocks. That to me is a 1.5 billion bushel corn number and about 120 million bushel bean number is the lowest number they can go. You're already talking about the USDA needing to show a rationed level of demand base next month just to get through the balance sheet.
How often does that happen on the May report?
I don't know if I've ever seen it. I really don't know if I've ever seen it. What it ends up being is the USDA has to solve for carryout, which isn't
Mhm.
real fun, but it just means basically these are the numbers we're going to throw out there. We'll let the market decide how it gets us there. Just to reiterate this, those kind of numbers, those acres numbers, most people assume the combination is going to rise possibly meaningfully on that June 30th report, but not until then. And you can see there's just no room for any error in that with a weather problem or something like that.
Yeah, I think I've heard you and others talk about that there isn't much historical precedent for a huge acres increase once we see that first number in the March acres report. Is that right?
Yeah, what we've seen is there's a tendency for more corn acres. Beans is just different. There's just not a
Okay.
real strong correlation. The corn acre increase is generally going to be based on planting speed. The faster the crops planted, usually you're going to see more acres go in as well. And that can be kind of regardless of where prices are, but obviously high prices are going to hopefully do that job. I think back to
Right.
2019, we got a large percentage of the crop in after June 15th, just because prices were so strong.
Right.
So that's kind of the takeaway from the supply and demand. It's important to remember, this is probably similar to what we're going to see in May, and we know it's going to look like this. It's just a matter of what happens post May with weather, with acres, things like that, to kind of drive that supply season market.
Sure. So I think on a lot of farmers' minds is the weather, both for planting. Right now we're kind of in this cold snap where guys are either waiting or planting and wondering if it's the right thing to do. In the not too distant future, we're going to be right back to worrying about drought.
Yeah, I think there's and maybe the next slide. There is obviously concern. There's always concern about drought. It's just with this year's balance sheet, there's just such
Yeah.
little room for error. So we're on heightened alert, rightfully so. Um, to me, if I look at this drought monitor, it's clear there's some issues in the Southwest and in the Northwest. I think the North Dakota's got almost unprecedented level of dryness for the last 6 months, and that's probably where a lot of our main issues are.
Mm-hmm.
If you look at the chart below, what that chart shows is a timeline series from start of when the drought monitors were issued back in 2000 to where they are today. And it's the percent of the corn belt that's in various stages of drought. My reason for showing that is there's always drought somewhere in the corn belt. And I think it's important
Mm-hmm.
to say, this year to me isn't really as bad as some of those years we've seen before. The blue line would show
Okay.
the percent of trend line yields for those years. So there is a very sketchy at best correlation between this season's level of drought or even drought throughout the year and yield. But
Mm-hmm.
notice the most critical issue is just watching the trend through the year. Is drought expanding? Are we seeing it get worse, or are we seeing
Sure.
it actually get a little bit better?
So it's a
So
little too early to cry wolf at this point, but definitely something to watch how we move
yeah,
forward.
that's how I'd look at it. And I think the drought monitor is one of those. It's very easy for that to be a driver of the market because it's a picture's worth 10,000 words in this case.
Sure.
So this looks dry, but in reality, it really isn't that much different than what we've seen from a historic perspective.
Right.
The areas of New Mexico and Arizona show up very vividly in that chart, but
Yeah.
that's not going to be affecting the
They don't
corn
grow a lot of
crop a
corn
great
down
deal.
there.
No, no. So if you want to go back one slide, I would like to
Sure.
talk about that real quick too. This
Yeah.
is an important aspect of to me, there's three main components of the most impactful weather events in the growing season. The first is planting pace. The second would be, I know this is it's pretty vague, but timely rain showers. And
Yeah.
the third is lack of real pollination heat. I've not seen heat outside of pollination be a real impact, but during pollination it is.
Sure.
But the planting pace is a big deal. Look at this chart. It shows you when that crop is essentially in a good spot of planting versus where it lines up with trend line yields. And the only time you've had a fast year of planting and a terrible yield was 2012,
Mm-hmm.
which was a drought from start to finish. The rest of the years you've had at worst slightly below trend corn yields. So beans
Yeah.
is similar but a little different, but a lot more variability the later you get into that growing season. So that's why planting
Right.
pace is important. Just like everything else the last 18 months, it can't be normal. Now this year
Yeah.
we've got pretty good situation from a soil moisture or dry conditions, which is so cold.
Yeah.
So
Yeah, and that's what I hear everybody say is conditions are excellent. Like we would be going gangbusters if we could just get it to warm up a little bit. I mean, we're recording this on the 19th. I mean, we can plant an awful lot of corn awfully fast and be not behind schedule at all if we could just get some sunshine.
yeah, I think just from what I've seen, there's a point in the calendar where you start to take a little more risk on, even if it isn't ideal, I just got to go.
Yeah.
And when you get into April 19th, you're probably getting close to that. If I get an open stretch of weather, I'll put it in some cold temps and just, if it doesn't germinate for a little while, I'm okay with that.
Yeah.
So I think we'll probably see that. I also think the forecast moderates a little bit in the
Yeah.
next weeks ahead. So
Say there was a threat of snow last night or today or whatever. It looks like we're gonna miss that. So I think that was everybody was the S word had people a little
right.
spooked, but I
Or
think
that's
now that didn't verify, I think it'll be gangbusters here pretty soon.
right. That's kind of what I see.
Okay.
We've got two growing seasons going on right now, and they're both critical. To me, it's the U.S. is the most important one. We're going to focus that. We have inside information, boots on the ground, but the Brazilian crop is a big deal. We've got
Yeah.
this second corn crop that really has had issues since it was even thought of. The chart in the upper left shows kind of the planting pace, and you can see kind of the brown line shows we've been outside of the normal range of planting for that second crop since the start. It was wet, got a late jump, hasn't it never really got planted until the 11th hour. More importantly than that, as you look to the lower right, that chart shows cumulative precip for that second crop, and it's spotty, but it didn't go in ideal conditions. It's not getting any water since it got in the ground, and
Mhm.
it's just not a good situation. This is a major important crop. It comes online just ahead of ours, and it's flows into that export channel around that during that first 4 months of our harvest. So it's a critical thing for that to be to kind of watch and see what the next leg has for the safrina crop.
Sure.
And to me, it looks like it's going to be subpar. So that's the second. That to me is it's not been heavily traded by the market, but I think it's the second growing season issue we've got to deal with right now, and possibly even the only area that's got a real serious problem currently.
Do you think that's part of what the rally today is from? Is maybe starting to realize what's going on in South America and that they need to price in more risk there?
Yeah, I think that there is some of that. Now let's go back to the 2008 comparison real quick.
That's
Yeah, I
right.
think there's a couple things that work, right now. And I think the one thing is that crop is starting to get more scrutiny. I do want to make one other comment, and that's in relation to this chart here. This just shows you the correlate or the kind of the scenario we saw in 2008. And by no
Mhm.
means am I trying to say that this market's going to go to the same levels it did in 2008, but the parallels are similar. And when I think that's been interesting about the last 10 days is the US dollar has been in kind of a free fall. It was extremely strong from basically January 1st till about late March, but it's been collapsing since then. We've actually seen almost retrace 60% of the move, believe it or not,
Mm,
in that time frame. So a weaker dollar is supportive to the commodity market, and I
sure.
know people think that that's lazy analysis, but it's not. We see money flow coming into commodities when you see that. And I think that's been a driver of the corn market as well. So in that chart in 2008, we had kind of a stretch that was very similar to this year, where we saw a slow, gradual move from like the high threes into the mid fives, saw a pause, and then you saw another leg higher. I feel like we're in that second leg higher. Now that year also had a culmination of massive fund buying with late plantings, concerns of flooding in eastern Iowa, and crude oil going to $140 a barrel. But this year it seems to be dollar led, tons of money in the marketplace, needing to find a home in a zero interest rate environment right now. So
Yeah.
some interesting things going on there compared to that chart from 2008.
I know we'll get to ethanol later here, but without crude oil going bonkers like it did in 2008, do you think we can get that same next level here at the end of 2008? Or is it going to take some odd outside market to carry corn along with it to get over to get that last leg?
Guessing you might need a fundamental catalyst and a money flow catalyst. I think
Mm,
both those things might have to be taking place to get into another level scenario. You
sure.
don't rule anything out. That's the
Yeah.
problem is that,
Not
the
this
last
year,
few,
not the last couple of years.
no, I've said the word first
Yeah.
way too many times in the last 2 years. So you don't rule anything out. I do think it would probably take a combination. And I think that, to me, this is just my opinion.
Mhm.
I'm going to guess the planting is going to take place. I feel like I look
Yeah.
at the forecast. I don't see anything that's just looks like this is going to keep pushing back into late May, in my opinion.
Right.
But the summer weather pattern is totally up for debate right
Yeah.
now.
Yeah. At some point, we're going to plant. This soil temps can't stay below 40 degrees all the way through August. So
Right.
we'll have a chance to get it in the ground. And yeah, and then it'll be up to rain and summer temps after that.
That's right.
I mean, in your role, Matt, you talk to commercials all day who are keenly aware of the inverse, and when you've got hedged grain, like you're an elevator, and you've got to roll short hedges into that inverse, you get punished pretty quickly. If you're a farmer who has old crop, what takeaway, what should you know or remember about an inverted market that you need to know if you don't have those short hedges out there that are you're looking at the calendar going, they're going to punish me on this day if I don't have this taken care of.
I think that in itself is the appropriate way to look at it. A grower shouldn't manage risk from carrying inventory or unpriced grain any differently than a commercial would. And to
Mm,
me, that it's the same risk. It's the same. It's worth, for example, July Sep corn spread. So July to September
mhm.
futures are at a 43-cent inverted market right now. It's worth 43 cents more, for delivery versus July than it is versus the Sep. To
Yeah,
me, that's a clear signal of what you should do with your marketing efforts. And then, even looking at the difference between September and December futures, there's an 18-cent difference in that. And that's why there's going to be some areas of the world that will plant early maturing hybrids to try and
mhm.
capture some of that old crop premium. The same approach should be taken with anything you've got on old crop is marketing into that inverse. The reason an inverse exists is to break itself, to
Sure,
draw the supplies to market and make sure it's getting satisfied. So that's the happening in both old corn and old beans, and I
sure.
would anticipate that theme to exist for a little while.
Okay.
Yeah, old crop marketing is, I don't want to use the word easy, but I do
Yeah,
want to use the idea that the message is clear from the market.
yeah. I think that makes sense. You may not know exactly. You may not be able to look at the inverse and say, "Oh, I need to sell on this day because it's the high," but you can get a maybe a more zoomed out version of, "I don't want to carry it past this point in the calendar because that inverse is a punishment." Whether you have a short hedge there or not, once July goes off into delivery and off the board and nobody's bidding against July anymore, that value's lost whether you had a short hedge there already that you're rolling or not.
That's right. That's right. And it just, the commercial aspect of that is they're never going to take that chance, of carrying.
Mm,
You have a huge break even risk that is not very often rewarded from the market. So,
mhm.
best advice is still manage risk, market into that. There's even a 12-cent inverse from May futures to July futures. So,
Yeah.
um,
As far as new crop demand goes, we've seen good news from ethanol margins, and soybean crush has been very strong. I mean, with the exception of the great freeze in February. Do you expect all that to continue? Is this just a short term flash in the pan, or are these some fundamentals that will carry us for a little bit here?
The ethanol story is debatable. I think that's the safest way to to phrase that. I think that the near term is very strong. I think people are excited about Q2 gas demand. I think their margins are very good for. I mean, we're talking about for sure calendar year highs and possibly the best margins we've seen in years for the ethanol producers. So the big question is what happens after that seasonal gas demand. Are we going to still see
Mm,
like a July 1st forward boon and gas in demand across the U.S.? That's probably the debatable part. But until then, we're expected to see strong demand, good margins at the ethanol level. Crush demand is a little different, and I'm not
mm,
sure what I want to say on that one. Feed demand doesn't seem to be strong. I think we've got a question on animal units, not just here, but in the international marketplace as well. China's had, even they're not believing their own data, anymore. So there's issues with that. Um, but I do think, I mean, that's probably the most concerning portion of the balance sheet is just the feed demand doesn't seem to be moving with prices. The uh, the rest of it is pretty solid right now with ethanol. With even exports are obviously running very strong, and then the acres component, the supply side is supportive as well.
So when you think ethanol, you think driver as gas demand. but with soybean crush, it's much more led by feed demand rather than biofuel demand. Is that right?
Correct. Usually meal is going to be the leader of the soybean crush. And it's just been
Okay.
fascinating, all year, if you'd have told me that meal would have been the laggard of the commodity markets, I would have said that doesn't sound right, and
Mhm.
it's been the weakest leg of almost any of the markets. So it's a concern, and like you said, you had the February freeze. Crush capacity was reduced significantly in that month of February, and you never really saw meal prices pop up. So it just tells you there's a little bit of a concern on animal numbers in there, or
Sure.
margins, or whatever.
Yeah. So the margins on ethanol, is that more of a spot market thing, or are the deferred margins good? Do you think they're able to be locking in some profitability and keep that demand churning for the months ahead?
It's for sure spot, and it's
Yeah.
definitely for April, May. The deferred margins, even through June, July, are pretty good.
Okay.
August SEP is a gray area, and that's mostly just because of no one knows where the corn basis value should be plugged in at. But no,
Sure.
it's a strong ethanol margins at least through kind of the summer months, and I think we're seeing some plants take advantage of that margin structure, looking at locking in some margins, and that's where you're seeing some corn basis trade even for June, July right now. But yeah, it's a pretty optimistic, story, and one very different than we may have thought of just 6 months ago.
Okay, Matt. So as we kind of wrap up here, we've talked old crop, we've talked some 2021 production. If you had to summarize, say, in one or two things for the farmer to remember as far as marketing, maybe that's an old crop question, but especially with the new crop, we've got a bull market, we've got this crazy inverse, we've got some weather questions. Of all the different areas, what's maybe the one or two thing you'd put at the top of the list to keep in mind?
I think the seasonals is the most important thing to keep watching, and a lot of things, psychologically happen
Mm.
about mid to late June. We've got a ton of weather. We get a nice sneak peek at what people are still forecasting for July precip and temps. I think that's an important thing as you
Mhm.
transition into that July timeframe. You've got the acres report, which we all assume is going to have bigger acres number than what we saw in the
Mm.
March numbers. That's important. You're through planting. You're taking risk off the table from that portion of the calendar. It's just a transitional phase, and I think you get on the opposite side of 4th of July and you're really on borrowed time from the seasonal approach to this market. And I think that's an important thing. That's the top thing to me, is just remember the seasonality. Second thing is we are in a tight situation. We've got a hair trigger approach to the next leg of this market. If there are problems, we're going to see another level to where this market can go, as it's going to simultaneously try to address supply concerns and also possibly affect demand markets. So, there's so much time left, but we just have to know, this is a watch your weather, watch your seasonality. I think both those things are going to be critical this year.
Matt, thank you for making
Yeah.
time for us. Thanks for catching us up to speed here. We'll touch back with you a little later, maybe this summer, and have you update us again.
All right. Thanks, Chris.